All right, here we go. Hello, everybody. Welcome. It's Monday freaking morning. We are here, January 9th, 2023, and it's time to open the market. I hope everyone had a great weekend. I had a very interesting weekend, to say the least. Very interesting. That's the best way to describe it. But we're here. Hello, Philip, good morning. Justin Bryant from far away. I thought the mirror on the thumbnail was an earring. I never got an earring, but I think I might look good with an earring. Hakun Lean, what's up? Glitch Life, what's up? Iceman, what's up? C Koch 3, hello. Victoria, Australia. I've wanted to go to Australia for the longest. I got to come one day because I just think the women in Australia are really beautiful, so it'll be awesome one day to go to Australia. Damien, hello from Oregon. Jesse, Paul, David, I hear about some YouTubers not getting paid anymore. What's going on with that? Alvarado, good morning. I know YouTube introduced some new guidelines when it comes to not cursing and demonetization, so that might be part of it. But nonetheless, yes, here we go. I thought you got Gage's emit from that thumbnail. It looks good. Okay, very good. Here we go. 76 people in 1 minute. Thank you for starting your morning with me. I hope everyone's having a good day. Hope everyone's having a good morning. I got to sleep at 10 p.m. or 11 p.m. yesterday, so I feel very refreshed. I feel very good. If I could sleep at 11 p.m. every day, that would be amazing. So here we're here. Of course, Emit likes the snow bunnies. Okay, no, actually, what I didn't want to say this, but when I was on TikTok last year and I was really obsessed with TikTok, the Indian women in Australia are just absolutely beautiful. I just the algorithm kept showing me more Indian women from Australia. They're all from Australia for some reason. And I was like, I didn't even know Australia had Indian people, but the Indian women are beautiful there. So I would love to go there one day. And we'll keep going from there. Lots of prank channels are no longer being monetized. Yeah, I mean, look, ad revenue is slowing down for everybody. So YouTube might be a little bit scared of what's going on. And that's why ad revenue is tanking. All right, we got a lot of things to get to in the morning. Right now, the stock market is up, and it's up pretty nicely. Tesla at 117, S&P at 390. Is it 390 or 390.2022? It's making a decent recovery from where we saw ourselves last week. I think lows of S&P last week were at 379. So we've got a lot to dive into. Okay, before we do that, I want to get these out of the way right now for the people that are here, the OGs that joined immediately. I appreciate you guys so much. 100 people, thank you for being here. Let's start off with the word of the day. Word of the day from Merriam-Webster, charlatan. A charlatan is a person who pretends to know or be something in order to deceive people. And oh my God, when I saw this was the word of the day, I cannot tell you how heavily this word resonated with me over the weekend. I'm not going to get into it, at least not now. And maybe not ever, because I want to be the bigger person. I got to be the bigger person. But this word resonated with me very, very deeply. And the next thing we're going to do before we jump into the market is the quote of the day. Can you guys see this? Yes, you can. All right, here we go. Albert Camus, you will never be happy if you continue to search what happiness consists of. You will never live if you are looking for the meaning of life. The sort of end idea of that quote is that you have to create your own meaning in order to find happiness at the end of the day. All right, now that we got that out of the way, let's get into the markets. This is absolutely incredible. We were expecting a massive crash to happen. I mean, it still might happen, but last week the S&P tanked. Tesla obviously got to 52-week lows. It also tanked. And for some reason, the markets are up. And they're doing pretty nicely. So let's go to Tesla right now. Tesla up 4% in the pre-market at 117. We will see in 6 minutes how badly it is when it opens up, or we will see how good it can keep going. One of the reasons I think it might be up, even though Tesla China prices are being slashed and things of that nature, is honestly the fact that maybe their investors just feel like it's oversold at the end of the day. I mean, at some level, it had a really sharp bounce from 102 that we saw the other week, and then it just came all the way back up. And one could argue that might be a little bit of a floor, but we will see how it keeps going. Roku at $43, Zoom 69, Neo 1037. It's up 2% pre-market. Let's go to Palantir. Palantir also announced a new deal. I will get into that as the market opens. I did a separate video of that. I'll be uploading that a little bit later on the channel. Palantir at 647 right now, 1.09%. The new product they introduced actually was really, really interesting. It's in the healthcare space. Again, they continue to fuel sort of this thesis that they're one of the most undervalued healthcare tech startups on the planet. And in that video, I go into a lot more analysis for that. NASDAQ 1056. It was at 10.3 last week. That was 10.207 last week. It was at the lows. So a nice sharp bounce of 264 points, up 2% in the pre-market. And we're going to see where it keeps going from there. Ramu, good morning. Thank you for being here. Darntons, thank you for being here. How did you come up with the idea of your startup? Okay, that's a loaded question while we're doing the market open. There's a very big story to this, but the TLDR is I always wanted to be a singer. I realized I couldn't sing. I did debate. I realized that I had a little bit of a knack for speaking. And then I just saw an opportunity where like speakers weren't being treated as rock stars. So if you could bring a platform that immortalizes a Spotify of speakers to say how many speakers, podcasters, poets, comedians, et cetera, would use that platform to get their voices out there. And then I just did a lot of research and I saw that, you know, the market opportunity exists and it's not there. OMG, did Amit finally get a word's definition right? Justin, dubious means foolish in some alternative universe, even if it means doubtful. So don't hold me to that. But yeah, that's how I came up with the idea of the startup. And then we just pursued it and they went on this beautiful journey. Speaking of the startup, let me do the plug here. 169 people. This is the best time to do the plug. Last day to invest, January 13th. I think we raised almost $7,000 over the past week, as I've been telling people it's the last day to invest. January 13th is actually the last day. After that, no more investments. I did a video over the weekend of how we did in our progress. It's linked in the description. You can check it out. So if you're interested, if you want to hop on a phone call, a Zoom call, this is like today is the day to do it because it takes a day or two for your money to clear from the bank to get into WeFunder, which is what we use to collect the money. So if you're interested, please let me know. And, you know, big chance we fail. There's a chance we succeed. If we succeed, risk reward is really high. If we fail, you have to be okay with losing that money. And so if you guys are interested, please let me know. Your facial hair grows quick. Yes, George, it does indeed. All right. So the interesting thing today is going to see where does Tesla go if it goes up, if it goes down. I had a text message exchange with a very interesting software engineer that I respect very deeply, and he thinks Tesla's full of shit. He thinks that Elon Musk's company should be worth more, maybe 200 billion. So he's not bought in onto the story at all. And it's interesting to see how Tesla's rebounding in the pre-market and how investors are actually giving it a little bit of breathing room and not letting it tank. The podcast I did with Financial Junkies over the weekend, Chris made a really good point that says, you know, he's waiting for earnings. He's not going to buy until earnings. And I kind of agree with him to an extent. Like, let's see the numbers. Like, the stock's not going to moon after earnings, not in this macro. Like, we can guarantee even if the stock goes up 5-6%, it'll come back down because this macro is not friendly to that. Unless we have an entire market rally, Tesla's rally on earnings, if they hit it out of the park, is not going to sustain itself. Second of all, the chances of hitting out of the park are a little bit smaller given all the macro uncertainties we've seen and the lack of deliveries that they've been able to hit in terms of them missing 10% year over year on estimates. So earnings are not going to be amazing, which means the stock price will probably tank a little bit more. And that's probably the best time to see that if the numbers aren't horrible, then this is a better opportunity to get into. So I'm okay with waiting for the numbers. Meta at 130. I have deep regrets. I did not go all in on Meta at 88, but now Meta at 130 feels a little bit expensive to me. In the grand scheme of things, it's not expensive, but in this macro, I think it's a bit expensive, especially because earnings for Meta aren't going to be, I think, phenomenal. I mean, we're going to see good revenue numbers, but it's not like they're going to hit it out of the park. I don't think they're going to beat earnings, especially with the ad revenue slowdown that's going on right now. Spotify at $83, did a video about them that'll be coming out in a little bit today. Microsoft 224 did a video about them and Bing versus and ChatGPT incorporating versus Google. So we're going to talk about a lot of those things as we get into the market. China prices are slashed because China prices were elevated in order to keep up with the demand. Now the demand is lower, prices went back down. This was the plan from the beginning. That's a fair point. And honestly, I think if you're a Tesla shareholder, you don't care about margins. You care about getting vehicles on the road so that the eventual FSD creates the 80% software margins that software has. And like that means you got to keep selling cars. And so if you keep selling cars, that's the important thing. Meta will see 88 again. It will be expensive at the time. Yeah, Jay Schwa, you've been dead wrong about this. We did the Meta earnings call live and you were in the chat trolling Vitali about his Meta position. You've been wrong so far. I hope Meta sees 88 again because I will actually load up, but you've been wrong. I don't think Meta is expensive. They have 3.4 billion people that use the product. They're going to do $32 billion in ad revenue in the quarter. It's where else do you go to advertise your product, Jay Schwat? Especially if ChatGPT beats Google and there's no more advertising related with search. I don't think that's going to happen, but like imagine, right? Where do you go to advertise your product? You got to go somewhere. All right, it's 9:30 a.m. Here we go. The stock market, January 9th, 2023, is now officially open. Wake your ass up. It's January 9th, 2023. There is no room for being tired this early into the new year, especially when the stock market is really green. Here we go. S&P 390 up 0.5%, Apple 0.88% up, Palantir up 0.23%, Ford up 0.91%, NASDAQ, wow, look at that. NASDAQ sharp bounce 95 in the first 95 points in the first couple of seconds. Tesla 118. Let's see where Tesla goes. Let's see how the story develops. It's doing well. Tesla probably needs to break through, I would say 120, 125 to get a little bit more of breathing room before people feel comfortable even jumping back in. Roku at 44, Xpeng 1028, Neo 1075. Again, S&P at 390. Very interesting. Psychologically, I mean, again, the S&P at 390, it's only $10 away from 400, which is a huge psychological thing. I mean, like the S&P was supposed to crash by now, but it's not. Now, granted, we'll see what happens, but it's been a very slow burn for S&P. It's been a deep burn for individual equities, but for the indices, they have not tanked the way we thought they would tank. Enphase at 237. Enphase has fallen from grace, obviously at 330. Probably should have bought puts on it, but I just didn't. You know, the stock I'm thinking of buying puts on, I'm finally thinking of doing it, is Netflix. I'm just finally thinking of just buying some puts. I do want to sell some cash secured puts on SoFi. I think I'll be doing that actually today. I'll probably do that live because I was looking at the premiums last night and I was like, you know what? I want to increase the SoFi position. Let's sell some cash secured puts on that. Netflix at 316 doesn't make sense to me. Doesn't make sense in this economy. Doesn't make sense with their numbers. Now before I buy puts, I want to really go deeper into their financials, but it doesn't make sense. And this is the first company I've ever bought puts on. So it's going to be interesting, but it's just, I just don't believe in this company at all. Granted, I would like to see their Q1 earnings and do a little bit more research, but by then the stock might tank and I might miss on the opportunity. So I have to do a little bit of thinking to see what happens there. We have Taiwan Semiconductors at 80. Nice bounce from 71. Shopify at 37. We have Rumble, $7. Ulta Beauty, 484. So nothing too crazy in the market. Relatively flat. I mean, it's up, but not up like crazy and definitely not down like crazy as well. Everything is up. When is the big tech Q4 earnings? I think end of January, early February. That's when we're going to see most of them. Do you have a video on how to use calls and puts? So I made one video called I made 2% or 12% of my money in 2 minutes. If you just look at that on my YouTube channel, that talks about cash secured puts. I don't have a video on calls, but I do have a video on cash secured puts. Gabe GS Strategies, that's a great channel. He has a ton of information on options, so I would definitely check him out. Do it. There's no reason to start the wheel strategy. I'm experimenting with Palantir and SoFi. Yep, I totally agree. Okay, let's get into the talking heads and see what they are talking about today as we get into the market. By the way, I hope everyone had a good weekend. My weekend was very interesting, but I feel very I guess just refreshed going into the new weekend and seeing what's going forward. So by the way, we finally got a new Speaker of the House on Friday. That was an interesting little debacle we had. Let's listen to someone saying I would be buying a Tesla at current levels. So this is a bull take on buying Tesla. Here we go. Let's listen to this.
Dan, it's great to see you this morning. I think there's a lot of folks who have they've held on. They've been on this wild ride, and they're waiting to know if this roller coaster goes back up again.
Good morning, Andrew. I think there are a lot of opportunities in the technology industry at current levels. Specific to Tesla, they, like others, are being impacted by cyclical forces, and I expect that to remain a factor in the near term. But I think the bigger story there is that Tesla is a leader in electronic vehicles, and part of it is that their business model enables new services like self-driving to be delivered over the air, and I think that's powerful. Meta, which you mentioned, remains important to advertisers and to users. We're focused closely on that transition, and we prefer Google in the space given the durability of search. But we do see opportunities across the space.
So if you take the big names out, where are these opportunities and who are they?
So if we look at artificial intelligence, you have a company like NVIDIA, which is really a critical partner for a lot of the new workloads in AI, areas like drug discovery, fraud detection. Look at the world of public safety. You have a company, Motorola Solutions, which is really a leader in delivering video and analytics.
So widely held, whether you would tell people to hold them if they're still holding them, because I do think there is this sort of contingent who, you know, we've taught people over time you're not supposed to sell when things are going down, and so For a long time, things have been going down and folks have not been selling, and what they're supposed to do at this point in the ballgame.
My recommendation would be to hold on to those names that we think are attractive, even in the face of what are certainly challenging demand drivers globally. So, for example, Apple, which has pulled back along with others, their iPhone franchise remains durable. Yes, they will be impacted by demand softness in parts of the world. China, of course, remains a wild card there. If you look at Microsoft, they can't escape some of the challenges in enterprise spending, but their cloud platform, Azure, positions them well over the next years. And so if one is able to hold on through what is, of course, a challenging period, I expect the market to look towards a reacceleration in the growth later this year and more so into 24 and 25. And as we appreciate the market as a discounting mechanism, which can help drive better performance for those shares, assuming there is, of course, growth and innovation.
What would
Okay, I'm not gonna lie, that guy kind of sucked. That guy said nothing, bro. It must be a slow day for CNBC because I'm like trying to get the value out of what he's saying, and the guy's just like, yeah, like hold your horses and DC. I was like, okay, that's that. I guess, I guess CNBC got to reach out to some better analysts or something, get some more people to get on here. Let's look at someone who we know is going to talk a little bit better. Fed rhetoric remains hawkish. Let's hear what they have to say, and then we'll get back into the market. Granted, the market's up today, so let's see how hawkish the Fed needs to continue to become.
Hey, Becky, yeah, the Fed is supposed to be listening to the data, be data dependent, but it's sounding a little tone deaf these days. Wage growth, as you said, slowed. Inflation is down, but Fed rhetoric remains as hawkish as ever, focused almost solely on the inflation risk, not the economic risk. Bostic said, Atlanta Fed President Raphael Bostic telling us there's more work to do. Esther George on Wednesday told us that the 5% rate should go well into 2024. Tom Barkin on Friday said the inflation fight isn't over. And the minutes on Wednesday told us that no official is expecting cuts in 2023. Meanwhile, the ISM service sector contracted. December wage growth slowed. November was revised down sharply. That was the one everybody was scared about. 5-month annualized inflation is running around 2.5%. To be sure, the unemployment rate did fall by 0.2, but here's how the market reacted to all that data on Friday. The 2-year fell in 2 steps from the jobs number and then again ISM services, a sign that it sees both the inflation and the economic weakness that's out there. You couldn't see that kind of drop in the Fed rhetoric anyway. The appearance, at least by looking at the comments, is that Fed officials are not really data dependent.
And again, remember, this is good, right? This is good that the 2-year is dropping because the lower yield a 2-year or 10-year bond gives you, which is, by the way, like risk-free, which is the whole point people invest in those over equities, the better chance stocks have of going up. So, I mean, the Fed rhetoric is not matching the 2-year falling. They're still continuing to be hawkish. So, I mean, how low does the 2-year, 10-year have to go in order for the Fed to decide maybe we should think about doing the P word, which is pivot? But we'll see if they take into account that information.
Instead, they looks like they've got this idea in their head to go to 5% or higher almost no matter what. Charles Calamaris, a former Columbia professor, talked to him over the weekend. He said, what's strange at this moment when things are so ambiguous is for the Fed to be acting like their actions are so predictable. The Fed may have it right. Inflation is a persistent threat, and there's been no progress to warrant a backing off. That may be correct. Or they may be making a mistake similar to the one they made last year when nearly all decided, wrongly, of course, that inflation was transitory. Rather than a debate and different takes on the data, they all sound like they're talking or singing from a script that is ignoring the data. Becky?
Steve, how much of that is because of just their concern that the market is going to be off to the races if they at all indicate that they're backing down? I mean, that's what I kind of took away from the FOMC minutes last week when they released it, that is a topic of conversation, something that comes up in the room.
I guess you could call it, it's all RYCC, rhetorical yield curve control, or as Chuck Calamara said to me, cheap talk.
So obviously, right, the Fed is just not looking to some of the core data points. They are continuing to decide to remain hawkish the way they are. And as a result of that, we're ending up with a weird situation where they kind of need the market to tank, but the stock market's not exact. Like the Fed needs to rip off the freaking Band-Aid and have the S&P go down to 3,400, and it's not happening yet. And so here's one of the core things, right? The S&P's multiple is still, I think, 18 times the PE. It's supposed to be 14 to 15 times historically, and so like the S&P is not supposed to be as high as it is right now in comparison to where it's historically been, and most likely than not in Q1 earnings will not be good for most stocks. I mean, it's not going to be like catastrophic, but it shouldn't be phenomenal. So unless you're like a really, really strong growth stock. So for example, I expect SoFi to do really well in Q1 because they, their member growth, their ability to just continually innovate. Noto been buying a lot of shares, very bullish. You would imagine them to do well, but something like Apple that did 100 billion last quarter, 90 billion in 90 days last quarter, to expect them to top that, it's like, yes, they might beat that, but they might get 89 billion. They might get 91 billion. There's not going to be some phenomenal growth that's going to lead you to think, oh, this stock is the future. I need to buy this stock. Maybe you buy the stock as like kind of like it's a staple in your portfolio, but not you want it to massively grow, which means at that point, how much can Apple rally? And if that's the case, if Q1 earnings are not good for the biggest names, then the multiple on those stocks have to go down, which means the multiple on the S&P has to go down. The S&P is still overvalued in comparison to where it's historically been from a PE perspective. So if it's trading, more than what it should be, we should imagine it to fall, but it's not falling. And like the Fed is like, we need this mother effer to fall, and it's just not going down. 379 was the lowest it hit last week, and it's still not there. If we go to the 1 year on the S&P, lowest we got was 346 on October 13th. And since then, we've rallied a decent amount all the way back up to 390. And it was at 428 in August. Like, remember that rally? We had to 428. Then we went right all the way down to 346, more than 20%. And then we went right back up to 389. So it's going to be interesting to kind of see how it ultimately plays out. Morning, Amit Jackal. Thanks for being here. Glitch Life, I own Coin. I think crypto is a strong feature. Just know what it is. I treat Coin as a crypto ETF. Let's actually go to Coin. I haven't gone to Coin. Shout out to 300 people being here. Thank you for spending your morning with me. Coin's at $35. Toby Luke, CEO of Shopify, has been buying a lot of Coin. He joined the board of Coinbase. I think Coinbase and Shopify have a crypto integration. I might be wrong on this. I think I would imagine that Shopify lets you pay with crypto. I might be totally off on this, but obviously that would accelerate some more crypto growth. Let's go to Bitcoin. It's interesting. Does anyone know Anthony Pompliano? He's a very big proponent on Bitcoin. I think I saw an interview with him back in March or April 2021 saying he has 95% of his net worth in Bitcoin. It had to be at a higher average than 17,000, I would imagine, because he was buying and pumping out a lot of content during the bull run. Pomp is one of those investors that's actually well respected in the startup space. And he's been so wrong about Bitcoin. He put out a video the other day saying that he's not doing advertisements on his channel anymore. And, if you're a media company, the way you make money is through advertisements. Like that's just the nature of the business. And he messed up with so many advertisers, whether it was BlockFi or FTX. He felt so bad. He just made a video saying we're not accepting advertisers anymore. So he's obviously been hit pretty badly with the Bitcoin slump. A lot of, media outlets covering crypto have been hit badly, just like, media outlets covering stocks. So Bitcoin now stuck at 17,000. One would argue in one of the worst economies we've had in the past 10 years, Bitcoin should be lower. So the fact that it's holding up at 17 is actually not that bad. It's not as lows of October of 15. So I mean, he's still holding up at the end of the day, or Bitcoin's holding up. Pomp is my uncle. I'm Joe Pomp's dog. Pomp, his wife, Joe, his brother. They're all really cool people, actually. It's just I don't want to say shilled Bitcoin, but they really went all in on crypto content in 2021, and obviously it collapsed. It's pronounced Toby Lutke. I think you're right on that, Chris. I messed that up. Actually, let's get into the Palantir deal. Thank you, David, for bringing that up. So let's get into that right now. I did a video on it separately. We'll go more into it, but let me pull it up right now. So here we go. This is the new news that they introduced today. It's not the biggest news in the world, but it's reinforcing the belief about them in the healthcare space. So let me get to the good part of this. Okay, so they're introducing a quality management systems for life sciences. So essentially, Palantir has a part of their business where they work with all areas of public health, including pharmaceuticals, biotech, clinical research, healthcare operations, and public health infrastructure, things of that nature. They created a new product, which is called QMS, Quality Management Systems for Life Sciences, that helps companies in the healthcare space, whether it's drug discovery, hospitals, et cetera, become more compliant with GXP requirements. Now, GXP requirements are the set of requirements that are required legally in order for a drug to hit the market or in order for your organization to operate effectively. So reading a little bit here, a top 5 global pharmaceutical company classified as an instance of Palantir Foundry as GXP qualified late last year, showcasing Foundry's ability to provide a single integrated platform to help accelerate the timeline to therapeutic launch, which means how fast can you get into the market, from translation research through GXP validated primary submission, secondary analysis, and real world studies. Several additional major pharmaceutical and contract research organizations are currently using Palantir's QMS for platform certification. Quote from Shyam Sankar, COO, the launch of Foundry into GXP regulated space marks a new chapter for Palantir's work in life sciences and is in line with our commitment to provide the most comprehensive cutting edge software to our customers. We intend to continue to launch more purpose-built products in the healthcare space to further accelerate our clients' transition to integrated clinical data repositories and statistical computing environments. Now, again, this launch of a fit-for-purpose QMS system to help its life sciences customers use Foundry platform meet GXP requirements is, again, a ontology-based OS in one place that takes all your data, harnesses it, makes sense of it, and allows you to have a better chance to qualify for GXP requirements, and ultimately you can get your drug to the market. That is the goal of this new service. It's, not the most interesting thing in the world, but the video I did later, you guys will see, reinforces the idea of healthcare and why it's one of the most exciting verticals for Palantir to get into. And if they can effectively tackle it, then it's a big deal, right? Because healthcare is a $4 trillion market. Palantir just needs a little bit of it. The CDC, the Cleveland Clinic, the Tampa Bay General Hospital, the NHS. I mean, just many, many, many examples of healthcare being a big market for Palantir, and QMS being a new product for them. The word of the day was done in the beginning of the stream. So if you want to check out the word of the day and the quote of the day, I'm doing it 2 minutes into the stream every morning now, so we get it out of the way. So that is there. All right, let's take a look at Economist. Actually, no, let's look at this. Interest rate cuts won't happen until the back half of 24. The Fed said it might not happen until 25. So let's see some analysis on when it happens.
Lisa, let's start this off with you. We're riding high right now. The market's looking really good. Very strong numbers after that job report showed just about everything we wanted on Friday. But you've got the CPI number and then earnings coming this Friday. Are you ready for all of this? How would you be placing your bets ahead of it?
Well, we're still cautious, and really the reason why, to your point, is we've got progress to continue to make on both those fronts. In terms of the inflation numbers, we have seen what is an encouraging trend to see some of those price pressures drop. But if you look at the absolute levels, they're still high. So in our mind, we still have both an x-axis and a y-axis issue on inflation, meaning not only how quickly do those levels come down over time, but also where are the absolute levels that they land at. And certainly, we've got some concerns on earnings front as well. While we've had the expectations come down, we really are all anxiously awaiting really what the guidance will be for 2023.
Greg, what do you think?
So they didn't give us everything we wanted in that report, Becky. Inflation dipped down. Yes, wage growth slowed, but the unemployment rate dipped down from 3.7% to 3.5%. And the Fed's been very explicit that it's likely that we need to see about a 4.5% unemployment rate to curb wage growth in such a way that it will then curb service inflation growth. And so while that gap exists, short of a major contraction in the economy, or short of a meaningful reduction in inflation, and I just don't think we've seen that yet, although, yes, the direction has been positive, the Fed's going to stay the course. And this is one of the areas where I differ from consensus, in that Fed funds rate is indicating a 25 basis point hike in February, indicating a terminal rate of around 4.8%, and indicating cuts in the back half. And I don't think any of that's going to actually happen. I'm looking at a terminal rate at about 6%. I'm looking at about 50 bips in February, again, followed by another 150. And I don't see us talking about interest rate cuts until back half 2024. And largely, just to second our colleague, it's because all of the heavy lifting is likely still in front of us rather than behind us.
So, Greg, what happens if on Friday you start getting earnings rolling in and these companies start beating what is at this point lowered expectations?
dramatically lowered expectations, Becky. Remember, about 6 months ago, we were looking at about 8% for the fourth quarter. Now we're looking at about -4%. And so I'm not sure that beats on expectations that came down that quickly. Earnings expectations in the quarter came down 6.5%. And so, number one, I don't think that that is going to be indicative of any change in the macro. And two, we're looking at 2023 estimates that are likely too high as well. Not as insanely high as we were coming into 2022, but still too high. I'm not sure how we get from a -4% in the fourth quarter to low single digits in the first and second quarter and high single digits in the back half. So I think that we're still going to undergo some negative revisions through the first two quarters, even if this quarter comes out a little bit more positive than the draconian expectations we're looking at this point. And I think that that'll be a headwind.
It will be very interesting to see if interest rate cuts actually happen this year. Like, again, the only way interest rate cuts legitimately happen is if inflation goes down so dramatically that we enter a place of deflation. Kathy Wood, I didn't listen to her latest podcast, but I know she's been talking about deflation a lot more and sort of like the scientific argument for why deflation is happening, especially in the used car market. I mean, that's a big indicator for her. And Elon Musk agrees with her. If that happens, like the Fed has to, at some level, recognize that there's real data. They cannot do inflation is transitory 2.0 in the reverse direction. If inflation is dropping that badly and consumer sentiment is going up, you've got to cut rates. Like it's like otherwise we're going to enter into another bad spot in the market. So it's going to be interesting to see how it happens. Tesla is up 7%. Yeah, let's go to that right now. Let's go into Webull. Tesla is up. I mean, like they're doing a phenomenal job staying awake. Look at that, 121 on Tesla. It was at 102 last Friday, and it bounced up from there. Netflix is also up. Coinbase is up. Palantir is up 4%. Apple up 2%. NASDAQ up a nice 1.4%. I mean, the entire market is relatively in this economy up. We'll see how this week ends. I mean, I think you always got to give the market a week, right? Give them a week, see where it goes. Give them a week. Can Tesla get back to 130, 140, 150 over the next couple of weeks? Or does it stay flat around 120 and kind of teeter around there? Meet Kevin's ETF is up 3%. Does anyone have any shares of the PP pricing power ETF? I know Tesla and Enphase were big positions for him, and those have dropped pretty badly, but I don't, it hasn't affected the ETF. I think the ETF debuted at like $20, right? So that's 17. So it's down, but not horribly down. And so it's, some of the bigger names that are there are rebounding a little bit more today, as we're seeing as well. Disney, look at that. Look at Disney, 90. It was stuck at like 80, stuck at like 83 over the past couple of weeks. Nice little rebound to 94. Disney is trading at 157 times price to free cash flow. So I'm not excited to buy Disney stock. I got to see a little bit more what Bob Iger is trying to do to turn it around, but it's, not too bad. Snowflake, Chris is buying Snowflake. Wait, why is everything green? DRK, I have no clue. Honestly, it's I guess the market's doing whatever. Maybe this gives us a little bit of an indication. The jobs report is the Goldilocks zone, is in the Goldilocks zone right now. Let's hear some analysis for why that's the case.
A lot of people, our own Rick Santelli, who is a tough critic, as you know, Heather, was really thought that was a solid report for a lot of reasons. There's good job growth, but also one of the primary concerns of the Federal Reserve, and that is if wage growth were to get out of hand, a wage price inflation, that could be a problem. Did you see some signs of an easing labor market in Friday's report?
So Friday's report was really quite excellent. I think it was that Goldilocks place we want to be. We're continuing to see jobs being added across the economy. That's good for American families, good for American workers, that those jobs are there. We saw that unemployment is at 50-year low, and that both 2021 and 2022 were record years of job creation. So that is all good news for workers. But at the same time, we've seen that pace of job creation slow, but down to a steady pace that is more sustainable. when we were trying to come out of the depths of the pandemic recession. We really needed those blockbuster rates of job creation, that 600 a month, 600,000 a month that we were seeing over a year ago, about a year ago, and now it's down to about, it was 223 last month for an average of a little under 250,000 over the past few months. So that is a more sustainable pace. It's exactly what we wanted to see happen in the labor market. And then, as you noted, Joe, on top of this, we've also seen wages start to, continue to see wage growth, but at a more sustainable pace. So coming down to an annualized rate of 4.6% last month, and with the monthly rate more in line actually with historical averages. So all of that is getting to the kind of labor market that we can sustain over time, that is continuing to build on the gains that workers have seen over the past couple of years.
You see in the Fed minutes, Heather, they're sticking to their guns. And there's some that say, not only 5% eventually, but maybe 5.25%, 5.5% on Fed funds. And that causes some people to think that the Fed is not going to rest until it gets unemployment back to somewhere around 4.5% or 5% to ease inflation concerns. Is the White House on board with that? That number one, we don't want wages slowing. The White House wants wages growing, and we really don't want unemployment rising. They're an independent body, the Fed, but do you think that the White House at this point is kind of saying, hey, guys and gals, be careful?
So here's the thing, Joe, as you know, and we say this every time we talk about the Fed, we do not comment on Fed policy, and we are focused on the things that we can do. And the president makes that very, very clear. He made that clear at a cabinet meeting last week, or he talked to all the officials and really made clear we are focused on the economic policy that the president does have say over. And right now, one of the most important things we're doing is focusing on executing on the robust economic blueprint that the president has put in place over the past couple of years, making sure that those bridges are getting built, being very excited that the cost of insulin is coming down to $35 for all those Americans all across the country that need it, making sure that we're executing on the ability of families to get that over $3,000, $3,200 tax credit if they qualify for it.
Okay, so obviously the White House is very happy with the jobs report. The Fed is not, right? The Fed wants to see less jobs being added because that will lead to a better chance of them ripping off the bandage. So it's an interesting dichotomy. We're going to do one more last look into the market before we leave and head out for the day. I hope everyone has a great Monday. Tesla retaining almost up 8%. Great rebound for Tesla. Entire market, as you can see, it's green. We've got the greens today. The market ate its vegetables. Let's just say that. That was a great joke, even though I'm not laughing. I hope some of you are smiling. Square up at 70. Datadog up at 66. Even Tattooed Chef is up 2.14%. So not bad. I mean, look, not bad. We're going to see how this lasts. Honestly, if, gun to my head, I don't think any of this is sustainable because I don't know what's changed since the end of December. Other than potentially inflation starting to come down even more, but we haven't seen that data. And I think, do we get CPI this week? No, we get it next week, right? It's supposed to be the second Tuesday of every month or something. Hold on, let me look that up right now. When's the next CPI report? When is CPI released? January 12th. We get it this Thursday. Wow, we get it this Thursday. Woo! Okay, we get it this. No, is it Wednesday? Oh, I think it's Wednesday. No, it says Thursday. So it's not. It's Thursday. It's not Wednesday. So okay, this is gonna be exciting. This is gonna be super exciting. Chris, I see you in the chat. By the way, Chris, I got your email. Still have to respond to it. I will be responding today. Sorry for not responding over the weekend. I just had so much stuff going on, but I will be responding today. But yes, CPI this weekend. All right. So I think the last question, as I say goodbye to 310 people, thank you guys for being here. What is your prediction for CPI? What do you think? Actually, let me do a poll. That'll be way easier. Let me do a poll, but you can put the number in as well. It's 7.1 last time. So I'm going to estimate we get, let me start the poll. Okay, CPI, let's do 6.8 or under 6.8. There we go. 6.8 is probably bearish. Under 6.8 is probably bullish. And that's what we'll see what happens. Chris, what email? No, Chris, there's a different Chris in my life. You're not the only sexy Chris in my life. I have other sexy Chris's in my life. And I was talking to the white Chris, not the Indian Chris. Okay, Chris? So, Chris, your name is not even Chris. That's it's the nickname of the Indian version of Chris. But no, I was talking to someone else. Okay, let's see what you guys think. Let me look at the poll. Let's look at the poll. So we have 50% right now. So 50% of you think it's going to be, no, 52% is winning under 6.8. I think it's going to be under 6.8. I think we'll get to at least, so 6.8 would be 3 basis points from December. I think we'll get to at least 6.6, 6.7. That'll be 5 basis points. Given how I'm seeing energy, even in my gas prices, I'm like, I think that's possible. I think it's very possible. I said under 6.8. If we beat 6.8, we are running. Be careful, it's not an impersonator. I think even if 6.8, even if we get 6.6 or 6.7, I think the market may rally a little bit. I don't think it goes to the moon or anything. And it probably will fall back down, but I think we get under 6.8. I think it happens. Okay. So that's it for me today. 5 videos coming out today. First video will be Elon Musk's biggest change to Twitter that might help Tesla shareholders dramatically. All of these are recorded. They're just waiting to be posted. Second, new Palantir deal. Third, Google versus Spotify, a really interesting comparison that I did with some statistics last night. That'll be coming up. Fourth, Bing and Google versus Bing and ChatGPT versus Google. And then finally, my reaction to CodeStrap's potentially last Palantir video. Really interesting. We got 5 videos coming up today. Probably will be released 11:30, 1:30, 3:30, 5:30, and 7:30. That is going to be likely the new video format for the channel. I know you guys will not be able to catch all of them, but if you can catch one of them, that's great. And I hope you guys enjoy, and we'll go from there. All right. That's it for me. 303 people. Thanks for being here. Last day to invest, January 13th in the startup. Check it out. Link in the description. If you want to get on a phone call with me today and talk about the startup, even if you want to invest just $100, which is the minimum, email me at amit@aldia.io or literally comment under this video or DM me on Twitter at @amitisInvesting. Today really is kind of the last day because it takes a couple days for the money to clear your bank. So today or tomorrow was literally the last day. And if not, I still appreciate all the support that's been here following the journey of the startup. And after January 13th, that's it. And we are officially going to be off to the races and see what we can do. All right. Thank you, everybody. I appreciate it. I'll see you tomorrow at 9:20 a.m. Goodbye and have a great day. Bye, everyone.